Hi everybody, and welcome back to FANG Friday, our last webcast of the year. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First, as I always do, thanks to everyone who likes this video and all our subscribers. We started this almost 2 years ago, and we could not have got to where we are without each and every one of you. Every view, like, and subscriber to our YouTube channel has helped us along the way, and we sincerely thank you for that. Now, in the next 2 weeks, we will not be doing our FANG Friday podcasts as Christmas and New Year's fall on a Friday. But we will be back in the new year, so stay tuned. That said, I do expect that this will be a relatively quiet period in the market. The only major event that I foresee is the $908 billion stimulus package announcement, although I think, rightly or wrongly, that it is to some extent already factored into the market. I would not expect a big response when it actually comes anyway. And by the way, I expect it before Christmas for maximum positive political impact. Looking over the past 18 months, back to when we started this series, we had 4 goals in mind. First, we wanted to focus on that small but key portfolio of 7 FANG stocks. Key because they form the top 25% by weight of the Standard & Poor's 500 and have been the market leaders for 10 years now. Second, we wanted to teach you to understand and use our stock valuation technology, SVA, or structural valuation analysis. Third, we wanted to show you how to make money from its regular use, and I hope that you have. Whether or not you were an SVA client of ours or not, which by the way you can do by going to www.strategicanalysis.ca/pricing. And fourth, we were looking to provide a good indication as to the direction of the overall S&P 500 index. I hope that we have succeeded in our efforts. By the way, to reassure all of you who have signed up for our webinar on January the 6th, after my discussion of the FANGs today, I will be providing last-minute and hopefully clear instructions as to what you should be looking to receive from us. Finally, as I will not be with you for essentially 3 weeks, I would like to leave you with a good idea as to what to look for and do with the FANGs during that time. So today will be a somewhat expanded version of the usual FANG Friday discussion format. Anyway, let's get down to business. In what I call my FANG portfolio, Amazon has been a buy following that November the 2nd setback, almost to its HB3, that's 16 times book value. Although we haven't seen much, if any, follow-through since that time, we know that the fourth quarter has been good for the company, and I would not be surprised to find out that the balance sheet growth has been greater than what the analysts have been projecting, and therefore the balance sheet is now somewhat understated. Accordingly, if I were thinking of doing any additional buying, I would probably do it right now. After what has been almost a 6-month consolidation, and I wouldn't wait for a possible pullback to the current HB3 price. The rate of earnings increases has actually been itself increasing, as you can see here. And despite the huge downside risk in terms of its fair market value calculation, This increase in the rate of earnings growth in itself could trigger some increased optimism in the period ahead, which would be or at least characterized, of course, by a lot of stimulus and, of course, optimism for the end of the COVID pandemic. But please note that if you do buy here, I would still use a violation of the current HB3 stop loss price as my stop loss. Apple would be my second holding. The last SVA signal was a buy at the old HB4 price of 104.5, and the stock has actually done quite nicely since that time. It's $128 right now. If I was looking to buy today, however, I have no clear signal, and so I would hold and enjoy my gains, but do nothing more aggressive right now. Between breakpoints, you see, prices are a random walk, as I will be discussing in my January the 6th webinar. And the most profitable gains and losses, for that matter, come from signals at one of those levels. My third holding in my hypothetical FANG portfolio would be NVIDIA. It's holding weekly, as you can see, just under its HB4 price, or 20 times book value. Personally, I would feel more comfortable not owning the shares at the present time. What really concerns me is that the return on equity of the company is pretty well flattened out. And I'm going to show that by clicking on this price to book box right here at the bottom of the slide. And what you see here, the dotted line, is a flattening out of the ROE, and therefore for the company to be able to reach its HB4 and break out further is largely unsupported by any visible fundamentals. As a consequence, I would be happy not owning this particular company right now. Facebook remains in limbo. We had a sell on the stock way back here in September, and I still wouldn't own it. And we are still comfortably on side from that action. As I have kept reminding you, in late September, when the stock really had set back, I did observe that if I had not sold when it hit its bubble price and set back, I probably would hold now. And at least it has held its own, if not moved a little bit ahead since then. So you could put it in my notional FANG portfolio or take it out, depending on your mood on that day. I mean, look at the price action of the stock since the clear sell in August, September. Just random movements and no clear focus. In the meantime, of course, Facebook is in the sights of various government jurisdictions for real or imaginary transgressions, and not being invested here would give me a small sense of holier than thou. To be completely candid, however, if the shares fell to their MSG price, that's 5.5 times book value, I would quietly sneak a few shares into my portfolio anyway. Okay, stocks that I personally would not own at the present time. The first one is Microsoft. Microsoft is a sloppy trader, and that is to say it's been trading either side of the HB2 breakpoint. Keep in mind what sloppy trading tells us. It tells us that investors are not sure what to do, and historically that is not a good sign. If I were thinking of buying, however, I would need a clean breakout over the HB2 price at $126. And a check back there that, the technicians breakout pullback. The long term doesn't look too promising for an increase in the valuation in price to book terms either. As you will see here, when I click on the price to book box, the ROE has pretty much flattened right out. Netflix, with the current COVID reprise, has been firming up a little bit, so there could be some reason to hang on here, maybe for a move back to the HB4 and perhaps a little bit further. However, if I were looking to enter the stock, I would definitely wait for a decline to the HB3, then look for a rebound. The action around the HB4 price, has been very sloppy. The shares are terrifyingly expensive, and the competition has been really heating up. Furthermore, if I show you the ROE of the company, you'll see that it has been flattening out for the last 2 years. And therefore, I don't see what the push is to drive the stock much further. As W.C. Fields once famously said, on the whole, I'd rather be in Philadelphia. That leaves Alphabet, and it's the one FANG stock with some potential excitement. This has actually provided FANG Friday subscribers with the best and clearest trading signals in recent days. We had a lovely sell on the stock in early September and a nice setback to the LSG price, where, as I said at that time, I would take my heart in my hand and buy, and then a beautiful rally right up to the MSG price. However, if we take a look at the 10-year chart of the company, which, by the way, is very, very regular, what we see is that the stock is actually right at the very peak of that long channel. And again, if we look at the return on equity of the company, we'll see that it has leveled out. And therefore, the driver to push above the MSG price is simply not there. Anyway, I would recommend that you keep this video at hand in case the stock market decides to do anything interesting in the next 2 or 3 weeks, and you need to be reminded as to what actions you should or could be taking with the FANGs. Balance sheets do not change that much, so you should be able to rely on the values that you see right now to take any action. Thanks to all of you who have signed up for our special introductory webinar on January the 6th. We will be sending you an email next week to confirm, and then we will be sending you an email on January the 5th with instructions as to how to attend. We're already pretty much booked up at this juncture, but if there's a lot of additional demand for this webinar, we might follow it up with another one in late March. For anyone who has just started watching FANG Friday for the first time, over the last 3 weeks, I've been letting our FANG Friday subscribers know that we will be having a free introductory webinar on January the 6th at 4 o'clock for all FANG Friday viewers who would like to learn about the science behind SVA and how to use our charts. I plan to spend about a half an hour or so going over the elements of the science. Then I will look at some interesting stocks in our database, but of course, no FANGs. There will be stocks ranging from TD Bank to Tesla. Following that, we'll have a short Q&A. Spaces are pretty much all gone for this one, however. Anyway, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools, as I trust we have been very clearly showing you. Have a good week and a great Christmas season, and I'll see you in the new year.